Welcome to my midweek market roundup, 19th May 2021. I'm Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live stock and market analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter page Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use for technical analysis, fundamental analysis, sector rotation, industry rotation analysis, and market level index analysis. They run on TradeStation and Metastock underlying platforms. That was the last slide of the presentation. Let's continue with the live system. A look at the global markets, starting with Australian index AXJO. When price was at the upper boundary level in the daily chart, as usual, I mentioned that Q traders were not going to take a long position. That was useful because from there price dropped, tried to go up, and today price dropped sharply, broke below the trendline support with bearish pressure and high volume. There is another trendline support nearby. Until that is broken, we are not going to take any short trade. Weekly also has a trendline support at the same place. We are not going to short now, and we are not going to take any new long position also. It is still in an uptrend until this trendline support is broken. Next, a look at the Japan's Topix index. Topix index was moving downward with lower highs, lower lows. In the last webinar, I mentioned that it was near the upper boundary. Then it displayed a bullish headwind, possible reversal signal. We wouldn't take a headwind reversal trade at that time because the weekly did not meet the checklist conditions. Every Q trade setup has an unambiguous checklist. Headwind setup has the same. That requires the headwind signal, but just the signal is not enough. All the checklist conditions had to be fulfilled, which was not true. So you don't take a headwind long trade. However, if we had a short position, what kind of short position? Probably a go with flow short initiated on this date, then we would be cautious and protect profit in that position. After that, price went up to value area. Today price closed little bit lower, but with a candle shape that is mixed. Weekly backdrop color is bearish. Daily is in a downtrend. Small retracement in a downtrend. We are not going to buy now. Instead, if we have a magenta color candle now, then we may look for the next go with flow short setup. For swing trading, Topix is not in an uptrend. CSI 300, China market, excellent. The trend line support in the weekly chart is still holding. Price was inside a range in the daily chart. The range was formed by the trend line support, and there was a trend line resistance during the last webinar, the weekend webinar. That trend line resistance is now broken. However, there is watermark resistance. Yesterday and today, for 2 days in a row, we have the indecision at the top indication. We have two successive doji candles. We are not going to buy now, and we are not going to short as well. It is still in a sideways range. So Australian market was in an uptrend but pulling back. Japanese market was in a downtrend, retraced and stopped in value area. And China market is in a sideways range at the upper edge of the range. UK market Footsie index still in an uptrend. There are multiple trend line supports. The trend line that I mentioned earlier, somewhere here, when I suggested taking long trades in fundamentally strong stocks, that is broken now. Similar to Australia market, one trend line support is broken. However, there are multiple other trend line supports nearby. Until they are broken, and there are quite a few of them, unless all of them are broken, we are not going to find low risk shorting opportunity. And the flow color, backdrop color, daily, weekly, both are bearish, so we are not going to buy as well. In an uptrend, but pulled back. Still in an uptrend. And India's Nifty 50 index, it is still moving in a range, in a box. Tried to go up, and today created an indecision at the top candle. Also displayed the bear release signal. If price goes down from here, then using the concept of reversal at a double top or triple top, we may take a short trade using intraday fine tune chart. Using daily weekly, we don't have a box short setup because the weekly is not meeting the checklist conditions. That is why we are not going to take a swing trade using the daily interval. Instead, we may switch to the fine-tune 5-minute chart maybe tomorrow, and if price tries to go down from this watermark resistance, we may try to take a low risk short trade using fine-tune chart. It is moving sideways. Therefore, the global markets are mixed. Some in an uptrend but pull back little bit, some moving sideways like China market and India market. None of them are in a downtrend. What about USA market? Let's continue with Q Global running on Metastock. Starting with S&P 500 ETF SPY. In the last webinar, I mentioned when price was on this day, weekend market roundup, that even if price goes up from there, I was not going to take new long trades. I specifically mentioned that I was not going to open new long positions for swing trading purpose. Instead, if price came to the watermark resistance and reversed, I was going to look for short trades. I had a few long positions. I wanted to book profit in them if price went up. What happened after that? Monday created a doji candle, and yesterday it reversed with a bearish flow. Now we have a trend line resistance, therefore we have lower high with a bearish flow. When the weekly is also bearish, is giving us a possible going for trend following short setup. However, because the trend line support, in fact multiple of them are nearby, we are not going to take a go with flow short setup using daily interval. If you are holding individual stocks in the USA market, they may be coming down without trend line support nearby, and I will share one such stock later. I think I remember. That is also giving a go with flow setup, and that does not have a nearby trend line support. So I in fact took a short trade in that stock yesterday. I'll come back to that later. Let's look at the other market ETFs. SPY, this ETF, I am not going to buy this now clearly because the weekly daily both are bearish in color. Nasdaq ETF QQQ, It is now inside a triangle pattern in daily, and weekly has trend line support nearby. Because of the nearby trend line support, again, I'm not going to short QQQ. In fact, in the last market roundup, I already mentioned that I may take short trades in individual stocks. However, I'll take them more confidently if these trend lines are broken. Trend lines in SPY, QQQ, and let's see DIA. I think DIA also had a trend line support. Yes. Here also, like SPY, we have bearish flow, bearish backdrop. However, there is a trend line support. Just like SPY, unless these are broken, and you can see there are many trend line supports, it will take a while before all of them are broken. It will not, usually instruments don't find it easy to simply pierce through one after another trend line supports. That usually doesn't happen. It may pause at those points. We'll look for a bounce setup if it pauses and starts to go up, but right now there is no such indication. We are not able to take long trade, not able to take short trade now. Not in the market ETFs. In these three. And what about IWM, Russell 2000? This is less bearish because here the backdrop color in weekly is magenta, but the flow color in daily is yellow, not bearish. Has a trend line resistance, has a trend line support as well. Therefore, we are not going to short IWM2. The market came down little bit, but really very little bit, not much. Individual stocks might have dropped a lot, but the market ETFs are still in an uptrend. For SPY, QQQ, DIA. For IWM, it is moving sideways. There is no bearish market. Some stocks might have dropped, growth stocks might have dropped more, but overall market is holding strong. That doesn't mean I'm going to buy many stocks. That I mentioned in the last roundup itself. I was not going to buy new stocks. That is the thing we can see from the market ETFs. Let's look at the market internals. What about the mega cap top 20? Inside a triangle pattern, right near the peak of the triangle pattern. We are not going to take any trade unless it breaks out of the triangle. Looking at the weekly backdrop color and shape both being bearish, I'll be happier to take short trades if it breaks down. If it breaks up, I may not be able to take long trade because the weekly may continue to be bearish. We'll see how mega cap top 20 plays out in coming days. Let's look at the total view, market breadth total view. Let's look at the total view daily interval that comprises of insights from two composites, Nasdaq NYSE, and four major indices, S&P 1500, 500, Nasdaq 100, and Dow Jones Industrials. If we look at all the stocks were 50 MA above 200 MA, a breadth indicator, still holding above the 80% level. The green line is the 80% level. The percentage of stocks above 50 MA, it has come down considerably from the 80% level, which is here. It is now around 57. Came to below 50, recovered little bit, and came down again. In the last roundup, I think I mentioned that if it cannot go up above the average line, which it could not, instead tilts down, that is in effect going to give us lower high, lower low. That came true. It came down. It is giving lower high, lower low. That is a time to look for short trades. And percentage of stocks above 200 MA, it is now below 80%, crossed below the average line, tried to go up, came down again. Right now it's around 76%. they are gradually coming down. That is also favoring taking a short trade. The internals seen through the price relative to the moving averages, that is weakening. Now, important thing is the distribution accumulation counts. We had a distribution count of 3 here. After that, price recovered and we actually had accumulation count of 1, then accumulation count of 2. On Monday, price made a doji candle. Here the candle price is not that important. I am plotting SPY here. SPY made a doji candle on Monday and Tuesday it dropped, but we don't see any distribution count on Monday or Tuesday. We had a distribution count here more than 2, 3. Now if we have another distribution count of 2 or more, then it may be more bearish and we may look for further down move. We'll see if that happens or not. The market ETFs are weak, but there are many trend line supports, so I'm not sure if we'll get another distribution count of 2 plus immediately. No signal yet from market's total view that market is going to drop sharply. It may change today or tomorrow, but so far there is no such indication. And if we look at the composite weekly charts, only one thing I wanted to point out, the weakness that we saw in Nasdaq. This is Nasdaq on the left, NYSE on the right. The percentage of stocks above 50 MA for Nasdaq, it is tilting down for quite a long time and it is remaining below 50%. Whereas for NYSE, it is moving sideways. It's above 50%. The relative weakness for Nasdaq is continuing. Also, Nasdaq is making less new highs. Stocks making new highs, percentage of stocks making new highs, that is coming down for Nasdaq, whereas for NYSE it is going up. That is why the market is overall still in an uptrend. Some stocks, Nasdaq stocks, growth stocks may be in trouble, but overall market is strong. We see that in percentage of stocks making new high in NYSE. In Nasdaq it is coming down, but it is still above 0. This is percentage of stocks making new high minus percentage of stocks making new low. So that is also above 0 for Nasdaq, though it is coming down. NYSE much above 0 and gradually going up. Advanced decline still going up for both of them. Up down volume still going up. So the internals are quite robust. Quite robust, I must say, based on data. Now there is not enough weakness in the ETFs, in the market internals, even in the mega cap top 20, that is in a triangle. Let's see the QH graphs. Bucket analysis, nicely pulled back the percentage of stocks in the most extreme bucket. It hit 30% and sharply came down. Now it is only at 1.8%. It is not overbought at all. It is now very balanced between the left side of the midpoint and right side of the midpoint, neutral, and we can see that from here also 51-49%, almost even. Relative to previous day, the percentage of stocks above mid bucket, that came down from 58% to 49%, 9% drop. So it weakened a bit and now it is even. Yesterday all the sectors were down and they were down by large percentages, some of them. So yesterday was a down day across all sectors. If we see the very useful 1 month to 1 day sector industry stock advance decline, in the last market roundup, weekend roundup, I showed that at that time, though Thursday, Friday rallied, the 5-day advance decline was still weak. And I think I have that post in a tweet I compared here. This is a snapshot from the weekend market roundup. At that time, I showed that though the Thursday, Friday rallied, the 5-day period was still bearish. That is what I showed in the weekend market roundup 15th May, and I mentioned that that is not looking good. In spite of big rally day on Thursday, Friday, those were not enough to turn the weekly period bearish. And after that, what happened? If I go back to QH to see the picture as of Tuesday's close, Monday, Tuesday both dropped. So now 1 day, 2 day, 5 day, and even 10-day period is overall more bearish. Of course, 1 day most bearish, and after that, gradually the bearish stance is reducing, but that's what is expected to happen. Gradually the bearishness will propagate from 1 day, 2 day to 5 day to 10 day to 1 month. 1 month is remaining bullish for a long time. We'll see if that changes or not. So we are seeing gradual weakening of the sector, industry, stock, advance decline. Now in the past many times it happened that 1 day and 2 day turned bearish only for market to go up and them turning green again. Will it happen again? It is possible because the 3 market ETFs are having trend line support, and the mega cap top 20 also have trend line support. So if those supports hold, I think very likely all these will turn green. And if the supports break, these are already red. 5 day will be more red, and I think 10 day and even 1 month may turn red if those supports break. So you may keep a close eye on that. And lastly, the find a technical breadth. I find it very useful because finally we make money if price moves in our direction, and we buy sell stock using the technical setup. So technical breadth is very valuable to decide whether I am ready to take long or short or stand aside. The weekly picture, balance between bears and bulls, all signals 68% bearish, strength signal more bullish 62% bullish, trend continuation bearish, reversal also bearish. So trend continuation is bearish, and we saw several market ETFs are actually giving a go with flow short trade except for the trend line supports nearby. So we have many bearish trend continuation go with flow signals. Those could be go with flow, those could be breakout. So we may look for breakout or go with flow trend following bearish trades in individual stocks. And I showed in the last webinar also, last couple of webinars, the bearish headwind in the weekly interval is not negligible now. I always keep an eye on that. In fact, I will share a stock I think I discussed yesterday also in the forum or Twitter that displayed bearish headwind at the very top, and I did take a short trade in that stock as well. So I took a bearish short trade using headwind signal yesterday, another bearish short trade using go with flow setup. So it will be a good example for both those types. Weekly picture, technical breadth is bearish. Let's look at the daily picture, yesterday's picture. That is also bearish. Overall bearish. Strength little more bullish because of a larger number of gap ups. Again, bullish strength followed by bearish reversal. Overall, it is even more bearish. This bearish indication I mentioned earlier also when market was at the top, that led to a pullback. We'll see if that happens again. Trend continuation is more bearish here also. So again, we may look for go with flow trend continuation trades, short trades. Finder is bearish. So we have weakness in Finder. We have weakness in the market ETFs also, but we are not able to short the market ETFs because of trendline support. We have weakness in Q Edge, sector industry, stock breadth as well. Let's now look at some of the stocks that I discussed earlier, recent days. Vivo, let's look at them one by one. And buy some, sorry, I was on mute for a while. When was I on I mute? Let me go back to Vivo, start with Vivo. This is a stock that I shared yesterday in the daily. If I look at the historical memory trend line, it had a trend line resistance that broke. I didn't catch it on that day. I only identified it yesterday, and I was showing using intraday fine-tune chart. Thank you, Mike, for mentioning no sound. Sometimes I drink a sip of water and I wanted to mute myself, and it happens sometimes I forget to unmute. Sorry about that. So I came back to Vivo, came back to 5-minute chart. Based on the daily trend line breakout, I was looking for a long trade. It broke out of early range here. You could buy right at that point, put stop below the early range low, and at the high of the day you already covered risk distance. If you took a long position using stock, you could book partial profit, or you could even book full profit and buy call options with part of the profit, thereby making it a completely risk-free trade. Now, why did I choose Vivo was also because of its fundamentals. I'm going to use Q Vital to check its fundamental strength. Healthcare supplies industry, while it is retrieving data for peers, let's check the industry strength or weakness from Q Edge. The healthcare supplies industry relative score was going up, and the percentage performance was negative over 5 days, over 2 days turned positive, and 1 day is also positive, gradually going up. Score relative to others was also improving. And if I see the rotation over longer period, it was a clear turnaround candidate, turning from weak to one of the strongest with acceleration. So that was a turnaround candidate in terms of industry. I am always interested in buying turnarounds. and it had great fundamentals, excellent valuation, great earnings growth, revenue growth as well, great earnings quality, short squeeze potential. Yesterday 70% up, 72 PR stocks of Meridian Bioscience, ticker symbol Vivo, they went up. So industry, fundamental, technical, everything was in my favor. The industry was weak for a long time and fundamentals are very strong. So these are stocks don't mind buying and holding for longer term. So what I did, I took a long position using the stock somewhere here, and when it went up, I had some profit. Then I saw it displayed two bearish headwinds, started to go down, and I was, as usual, I was keeping an eye on the market internals using Q Elite, the Nasdaq Composite, Advanced Decline, Up Down Volume, tick. Same for NYSE, Russell 2000, Dow Jones Industrials, Nasdaq 100, S&P 500. I saw that the market was weakening all across the board. All across the board. So when that happened and I had some profit, let me explain exactly how I traded, and you will see I usually repeat the same techniques over and over. I didn't want to close my Vivo position. I like the fundamentals, I like the industry. I think it might have dropped, and you see it didn't drop even below early range high. Didn't even go below that. But it was coming down along with the market. That is only normal. So I held on to my stock position, but I sold some calls. So I made it have the stock, sell the call. I made it covered call. Now what will I do? If it comes down in the daily chart, I will have loss in the stock position. I'll have profit in the short call leg. That's fine. I am willing to hold it longer term. And after that, if it starts to go up, maybe from here, maybe after undercutting the watermark resistance, if it starts to go up again, it will give a box long setup. If and when I have the box long setup, I will close my short call position, book profit in that, and then hopefully I will let the stock go up. That is how I use the options for flexibility, not for speculative, usually not for speculative purpose, not to have huge gain unless I am shorting the top. Sometimes I may take naked options, long options, only, okay, I shouldn't say only, most of the cases if I do naked options, that is on the put side and at the market top. Here I used actually stock. I wanted to hold the stock. I am happy with the fundamentals, industry, rotation, everything, but because market was coming down using intraday chart, I shorted the call. Now on daily chart, you can see yesterday it ended with indecisive shape candle, though the color is still bullish. If it now comes down, I'll have profit in the short call. The moment it starts to go up, I'll book profit in the short call so that I can maximize my profit on the long stock position. That's how I traded Fibo, still holding it as a covered call now. Now Labu I shared in the forum. Let's examine that. I think I executed it quite well. Let's look at Labu. Okay. So what I saw in Labu, if we look at the weekly daily at a glance, it was about to break above trendline resistance in weekly, about to break trendline resistance in daily, after displaying a bullish headwind, and when I saw it, it was above the watermark support. And therefore it was creating a false downside breakout. So I had many bullish signals, watermark support, false downside breakout at that level along with bullish headwind. So I was happy to take a long trade in Labu. Labu is the biotech bull 3x ETF. And if you follow me, I am following Labu for a long trade for quite some time. I think I shared it earlier. Don't know whether on Twitter or YouTube or forum. I actually shorted Labu somewhere around this area at this price level, and when it went up I had a profit. I booked the profit, and now I wanted to take a long position again. Let me show you from the forum post exactly how I traded, and I made an effort to mark up the chart with a lot of detail. I took it in the Schwab account, and these are the exact times. I wanted to show the exact times when I took the trades, and you may look at the orders later. I aligned these markings of the orders 1, 2, 3, 4, 5, 6 with the Q fine tune chart to show exactly how I traded. So this was Labu. When it broke above early range high, I shorted the put. Remember last time also when I initiated my trade in Labu, that was also short the put. Why I did that? Labu is 3x ETF. The options are quite expensive, and it was at a low price, so the volatility is high. I got fat premium when I sold the put. So I wanted to sell the put, make some quick profit from that, and maybe using the money I could buy the stock or buy the call options. So I initiated with short the put. That's my first order. Then I saw it easily broke above previous day's high, the green pivot resistance. So I thought, okay, it is moving up very fast. Why don't I increase my profit potential? Selling premium is not going to give me good money. Premiums are fat, but still not a lot. So I bought the stock, added to my position. That was my second order. Then price went up. I had very nice profit. If I remember, I had 20% profit on the 22 actually 22% profit on the short put order, and I had good profit in the stock. You may check that out. Stock is easy to know. It's this distance, and then it was stopping, and that was the same time when the market ETFs, market internals in Q Elite, they were weakening. So what did I do? Let me remove the lines. I booked my profit, half profit on this candle, the remaining profit on this candle. So I was left with only the short put. I made a profit on the stock positions on these two candles, and the moment I closed the entire stock position, I bought some call out of the money call. So that turned out to be a speculative trade out of the money call. Then I had the short put and out of the money call, and the call was paid by the mostly paid by the profit in the long stock that I already closed. Long stock I closed here, this order. Then I saw it was starting to go down again. So what I did, I had a long call and price was starting to go down. So I employed the same tactics as I did for Vivo. Here instead of stock, I had a long call, and here I shorted another out of the money call. So I made my position using these two legs here and here, a long call vertical. And when it was dropping, I still had the short put. I knew that if it continued to drop as it did later in the day, my short put would go into the loss. That I didn't want to happen. So I covered my short put for a small profit. Short put had a large profit, 22% profit at the top, but that's fine. I didn't let it go into a loss. I booked my profit in short put also. Therefore, at the end of the day, I am left with a somewhat speculative long call vertical that is expiring 32 days from now, and it is already fully paid. It's a free one, fully paid by the profit of the long stock and profit of the short put. So I think in spite of the market weakness, I timed it very well, and I used options to give me many options in fact. So if it continued to go up, I would simply hold on to the short put and long stock. But because the market was weakening, internals were weakening, I managed my trade. I think I managed it well. Why? Because I'm still having a long position, but that is entirely risk-free. Now, if it goes up again, coming back to the weekly daily chart, in the daily, if it goes up again, breaks above the trend line resistance, I think it will pause or pull back for a while. And the moment it starts to go up again, I will add to my position again. This was an attempt to buy at the very bottom, not as a trend following trade, but it is an extreme reversal trade. In fact, it was a breakout attempt. But even if the breakout was successful, I knew that there was another trend line resistance. That is why I didn't want to take too much risk. I quickly booked some profit because the market was also weakening, and I'm holding a long position already paid for by the profit. So it's a totally risk-free trade. Both Vivo and Labu, I used similar technique. Now for Vivo and Labu, the difference is Vivo is a very strong fundamental stock. So I just decided to sell a call and make it covered call. For Labu, I decided to book entire profit and hold a vertical call that is free. Now let's discuss end phase. Yesterday in a chat room, I saw a gentleman talked about plug, Plug, a well-known stock. Let's look at plug. And interestingly, that gentleman shared that he was booking profit in plug. But in Q technique, I use these trend line supports and resistances, memory lines. They work very well. You know, anybody who uses Q systems knows that. Trend lines act as support resistance, very significant, like I showed for the SPY QQQ dia. That's why I'm not able to take shots too much because of those supports. But when the support or resistance is broken, that is also significant. So for plug that was broken, I was surprised to see why somebody would book profit. See, it didn't pull back much, unlike Labu had a high volume breakout yesterday. In any case, whenever I hear somebody trading an instrument, I check it out using Q system. So I came back to my Vital and let's check the fundamentals of plug. While it is retrieving data, I'm going to check the industry. It's a renewable energy industry. So we may look at the alternate industry, renewable. It's not really an electrical components in equipment energy, not electrical component equipment stock. It's a renewable energy. So I'm focusing on the alternate industry. The relative score is nicely going up. Over 5 days it was down. Over 2 days somewhat down. Yesterday it went up, and I could see that in real time. Then I looked at the alternate industry rotation, renewable energy, again an excellent turnaround case. It was the worst performer one for a long time, and yesterday became very strong with some acceleration. So that was also a bit surprising to me. Firstly, plug was nicely breaking out with high volume industry showing excellent rotation in favor. So I didn't know why that gentleman would like to sell. He told later why he sold, but that's a different thing. Anyway, I looked at the valuation score. That was not good. Overvalued stock with negative and hugely decelerating earnings growth. So I was not happy to buy plug. What did I do? As usual, I carried out a peer analysis, looked at one-star candidates, and I found Enphase there. Let's look at the one-page scorecard for Enphase. It is in the same industry, therefore the industry is strong, and it is a one-star candidate. Give it a few seconds. Let it. While it is retrieving, let's check the. For the sake of it, let's check the seasonality. We have the integrated seasonality program now, Q season, retrieving up to 50 years of data. In May, there is no bullish or bearish seasonality. 56% of time it is up, but that's not enough. For bullish seasonality, we need near about 80% up. When it is up by 27%. That is something nice to have. When it is down, on average, it is down by 20%. So when it is up by 27% in May. When it is up by 10% in June. That is positive. That is positive. So there is no bullish seasonality, but the statistics, the other statistics that we can read from Enphase, they are encouraging. Okay, that's good. Let's go back to fundamentals. Now see the difference between plug. In case of plug, it was overvalued. Enphase is also overvalued, but plug had hugely negative and decelerating earnings growth, whereas Enphase has positive and accelerating earnings growth and also revenue growth, positive and accelerating revenue growth. It was going up. So I decided to take a long position in Enphase. Let's see. As the market pulled back, it also pulled back a little bit. What I liked is it gave a bullish headwind. You can see again right at the very bottom. That was the lowest candle. Isn't it interesting at least that how the bullish headwind came on the lowest candle? After that, it moved sideways for a while. Yesterday, when I first shared it, it was nicely breaking out. And what I mentioned is if it closes like that or better, then I would take a long position. That would be right. If you looked at Enphase as it is now at market close, Q guideline is not to take a long trade, not to take. But sometimes I am in a different time zone. I may take an early position using fine-tune chart and then fall asleep, don't track the market whole night. So I have a long position and I will track it. If it goes down, maybe similar to Vivo, I'll convert it into a covered call. I like the fundamentals, and USA government, several other countries are focusing on renewables again. The industry was very weak earlier, now turning around. So I may exit the stock position or I may just convert it into a covered call if it goes down. I'll see how to play it out. So those were three stocks I traded yesterday. Labu, I think I did the best in Labu because it's a totally risk-free trade. Vivo, I have high confidence on the stock, great fundamentals, much better than Enphase in fact. Though they are in different industry, but the valuation score and earnings growth for Vivo is much stronger. So Vivo, I am much more confident, confident. My confidence doesn't have much meaning, but I am comfortable to hold it as a covered call. Enphase, I'll have to see what I do. The valuation is not good, earnings growth is there, but not as good as Vivo, though they're in different industry. I'll see how they play out. Those were long trades. And you see, Labu, Vivo, they are in defensive sector. So I traded in defensive sector. If the market comes down, they will come down less or may even go up. Healthcare was down for a long time. In fact, if I go back to QH, let's go to the sector level also. I showed it, I think, yesterday on the tweet, but let's reviewing it again. Sort by 1 day performance. Which sector is the best performer yesterday? It was healthcare. So healthcare was down for a long time, and then yesterday, I think only yesterday, it became the best performer. That is why I drilled down into the underlying industries. That was a top-down analysis, sorted all the industries, and biotech was not the strongest in terms of score, but it was one of the strongest in terms of acceleration. So that allowed me to buy biotech. And instead of looking for biotech stocks that may go up down suddenly, I went for the biotech ETF Labu. That was the reason to focus on healthcare and drill down to biotech industry ETF. And how did I find Vivo? I continued the top-down approach. So I looked at these industries, drilled down into the underlying stocks using a single click. Then I clicked the 3-star button. The 3-star candidates gave me the stocks that are having great earnings growth, great valuation here, and also great earnings growth here. And it had revenue growth as well. So it was a 3-star candidate with great earnings quality and short squeeze potential. That is how I found Vivo top down. Labu also I found Vivo, but for Labu I stopped at the industry level. For Vivo I went down to the stock level. Those were long trades in defensive areas. Now let's look at a tweet. I think yesterday I shared a tweet. It's important, useful to look at the tweet when I shared it, so you know how the charts look like right at that time. Did I share something on Dow? Dow. Sometimes Twitter, I find it difficult to locate my tweet. Dow. Never mind. Let's look at Dow, the stock, DOW. It's a great fundamental stock. Let's check that out again using Q Vital. And once again, you will see how I used the bullish headwind at the very bottom, I think for N phase, and I used bearish headwind at the very top for Dow. How is Dow's industry? Let's check that out. Commodity chemicals. The industry score plunged. See the percentage performance also. Down over 5 days, down over 2 days. Yesterday also it was down. I could see that in real time. And if you see the rotation, opposite to what I saw in Vivo's industry, opposite to what I saw in Inphase's industry, it is rotating out of favor. Instantly, I could recognize that. So the industry was telling, if you are holding a long stock in this industry, be cautious. Again, top down. And I looked at fundamentals. Fundamentals were great. Then I look at its technical. What did I see? It had a very bullish run. That is in line with its strong fundamentals. 1 week ago, it displayed an indecision at the top. This week, again, as of yesterday, it was displaying the indecision at the top. Very bearish shape candle. And most of all, I saw that it had a bearish headwind. Again, remember just now I showed a stock that showed bullish headwind at the very bottom. And here Dow, the bearish headwind came at the very top. So at minimum, if I had a long position, I would be careful. I didn't have a long position, but it created a false upside breakout as well at the watermark resistance, displayed a bearish headwind and displayed a bear release. So in this case, if you applied the checklist conditions for bearish headwind short trade setup, all the conditions are met, except that you may keep in mind the weekly condition is it has to be bearish in shape at least. The shape was bearish, but we have to keep in mind the week is not over. So what I did, I took a speculative trade. As I mentioned, sometimes if I buy naked options, that is mostly on the put side in a stock that is at the very top, because if it drops, I'll have significant profit due to volatility expansion and also delta move. So I didn't use verticals, I use naked put, long naked put. It's a little bit speculative because the fundamentals are really strong, but I have a good profit already in the trade. If you see the fine-tuned chart and all this analysis you could do in real time, this is the point where it broke below early range low. The bearish headwind would have come by that time. You could take a short trade using stock, or in my case I used put options. Put stop just above recent high. You could use the stop. If you are using stock for put option, you wouldn't probably want to exit using intraday chart. In any case, it dropped and it closed right at the low of the day. So that is very bearish, very bearish. And into the close, the bearish volume kept on going up. So it is looking bearish. My decision to take a short position using naked put at the top is working out. And that is the only time when I tend to use naked options, only for shorting at the top. And another thing I mentioned, I usually align forces from market, industry, fundamental, technical, all these levels. Seasonality is optional, it's not a requirement for me. Now I mentioned if I have to give up any of those dimensions being in my trade's favor, I give up on fundamentals, and that is also on the short side. This is a live example of that. Fundamentals are strong, but fundamentals don't change immediately. I have a very low risk short setup in an industry that is suddenly coming down after being strong for a very long time. So I just needed to move little bit more. I could book profit on partial position at least. In the overnight market, it is down by 1.8%. So my option will be up by at least 10%, maybe 20%. But in any case, overnight market is not representative of how the regular market will move. I hope to make a profit. Now, last trade I want to share, we are at 1 hour point. I want to share one last trade. I mentioned I took few short trades. Two I'm going to share. One is Dow. That is a bearish headwind setup, and on Facebook I took a go with flow short setup. Remember I showed the market ETFs I could not short, though they had a go with flow setup. Why I couldn't short? Because the trend line support was very close. But here the trend line support is far enough that I can take a short trade. Here I used put vertical. I didn't use simple put. Usually when a stock is fundamentally strong, Dow was also strong. So Dow was at the very top. So I took a little bit more risk with naked put, but the reward will also be commensurately higher. Facebook, if I look back through the chart again, indecision at the top, indecision at the top, bearish headwind came here, came down, retraced, going down again, bearish flow, bearish backdrop. So it gave a go with flow short setup, not at the very top. And if you see the fundamentals, Facebook is very strong. Great valuation, great earnings growth, great revenue growth. So I didn't want to risk too much in case of Facebook. I used a put vertical. So those two short positions I am holding. We'll see how the market will do today. We are at 1 hour point, so I will not try to find more trades. You may be cautious with your long positions. You may start to nibble on short positions if you are willing to take shots. I thank you for joining. I will have the market roundup again during the weekend, usually on Saturday, but I'll announce the time on Twitter. not there, Twitter, and if you are subscribing to the YouTube channel, Trading Profitably, you will get notification from there as well. Thanks a lot once again. Keep safe, and as I always say, no reason not to do so. Trade profitably. Thank you.